This is Vinney and Beau show. Some of you might know me, Vinney Chopra, and my partner, Beau Eckstein. And we come to you live at 9:30 Pacific, which is 12:30 Eastern, every Friday. Thanks for joining.
And I think, Vinney, honestly, we at some point we're going to start a affordable housing multifamily division underneath Monell Investments. I'll run the division.
Wow.
We'll have a nonprofit component, and we'll help.
Wow.
We could probably help this in a big way, really.
I would love that. I would love that.
Yeah.
It's been an exciting week. I hope it's been for you also. Beau, you have some questions, but yeah.
Oh, yeah. I got a lot of questions.
How are you, brother?
Good to see you, Vinney. Good to see you, Beau.
Oh, thank you. We are so privileged to have you.
Hey, Vinney, real quick.
Yeah, bud.
All right, I'll bet you sushi that you don't know what does SAS stand for?
Hi there, everybody joining us, watching us. We are live in 7 channels actually today in the YouTube, in LinkedIn, in Facebook groups and Facebook. Thanks again for liking the show. Please give comments, share, and we are here for a very big show today. Well, good morning, America. This is Vinney Chopra coming live with brother Beau, Vinney and Beau show, Friday morning, 9 a.m. Sorry about this old intro. Actually, the new one we showed you last week got flagged by YouTube personnel, so we have to change the music. So our VAs are working on it. But again, thank you so much for joining. We got a great show today for you with a great friend of mine, Ike Mutabanna is here. I mean, he's a legend in multifamily. I mean, you're going to learn so much. If you're really looking into this market 2023, which we are expecting some big results in, going downward with the buyer's market and so on like that. We're going to talk about all those and more concepts. How are you, bro? Brother?
I'm doing well.
Hello, welcome, Ike also. Yeah. Bo, how are you doing, bro?
Doing well. I just did a podcast for my podcast before this, and I was telling you, Vinney, I get so fired up. I interviewed this guy, and he's like just turned 30 years old, and just a machine, has multiple businesses. And I love interviewing people because you're like, it inspires you. You get the right people around you, and you're like, wow, the sky's the limit, really, right? Like I think people that think big and go for it are the ones that achieve, right? Because that's what Joe said. Joe was in the military. This guy I just interviewed. So it was pretty inspiring to meet somebody at 30 years old that has like multiple businesses. His portfolio is worth about $50 million of his business values. I mean, it's just pretty incredible. And
you said he's got title companies, he's got mortgage companies.
He has franchises that do home care. Non-skilled home care.
Oh, that's where I'm going, bro.
And so I was listening to it. And the funny thing was, he told me how he acquired the first one. He was on the plane to go from Pennsylvania to Texas, right? And he was supposed to get SBA financing. Anyways, they ended up saying they couldn't do it. He's on the plane. He negotiated seller financing and ended up flying there to the closing table and close with seller financing. And that now his portfolio. He started 10,000 a week, and now he's doing 200,000 to 300,000 a week in revenue from this business. And he has multiple locations and franchises within this system.
We'll tell the audience to watch that show. Definitely, let's bring him on too. But let's talk to Ike. Ike is a great friend and a partner of mine, and he's the CEO of 110 Equity, owning and operating multifamily and commercial real estate assets. Actually, currently his portfolio includes over 1,300 multifamily units in his present company, but overall he's done 2,500 multifamily and above, close to 300 million, maybe even a lot more than that, brother, in Texas, Florida, North Carolina, and he's invested in industrial and office properties also. So he's got vast amount of knowledge. He's also MS in electrical and computer engineering. Look at that. The techie getting into, real estate. And that's the key. I'm a mechanical engineer who got into real estate, and I love it to the T. And Ike lives in Texas right there. And also prior to his investment ventures, He was a C level, which is a high executive level, with expertise in building, marketing, and customer research tech products. Welcome, Mike. So good to have you, bro.
Thank you.
Yeah.
Thank you. I apologize for interjecting earlier. I didn't mean to, but
No,
thank you for
no, no.
inviting me, guys. Really appreciate being with you.
Ah, no, this is exciting. We'll dig deeper into it. Give us a little short version how you got into from the tech world into real estate, and then we want to really talk about what's happening in 2023. I
Sure.
mean, you have some really distinct views, and all that, because you've been a operator, a very successful one. So we are all here to learn from you, bro.
Sure. Sure. Where do we start? So I guess you want to know how I got in this.
Yeah.
Let me just say it was completely accidental. Okay.
Hmm.
It was a random conversation. I was in the final company that I worked in before I started my business. And I used to live in Boston. So I was in 15 years in the Boston area, worked in a bunch of different, startup companies, all in the marketing, market research, technology, product space, focusing on optimization type of technologies.
Hmm.
And in the last company I worked in, which was a company which built a live market research product,
Hmm.
I was the chief technology officer there. But it was a small enough company where I would end up going on sales calls. And I was on a sales call with our head of sales. Um, and we're on in this, driving to the client, interestingly, in Texas.
Ah,
And she mentions that her friend was Joe Fairless, who, along
yes.
him, they both went to the same college in
Oh,
Texas.
wow.
So she talked about, investing in this uh, apartment building in Cincinnati, Ohio, and I had no clue what she was talking about. I'd never heard this whole concept before: syndications, coming together as groups and investing in large, commercial real estate. For me, real estate really existed in my head in the form of single family houses.
Yes.
I always
Yes.
thought that the large buildings, the large properties were always the domain of large institutions. So it never even occurred to me that there was an opportunity for people at our level to be involved in projects at that scale.
Yeah.
And it was a fascinating sales tour road trip where she told me all about what she was doing. They had just started off, so it was early enough where they hadn't really made that much progress, but they were doing a 160 unit in Cincinnati, maybe a, I don't know, like a 100 unit in Houston,
Hmm.
describing it, and I'm like, that just sounds really interesting. I'm going to go dig up more about it. And that's where the journey started. Just started
Awesome. Awesome.
trying to
What
figure it
year
out.
was that, by the way? What year
This
would you
was
say?
2014, 15.
Oh, wow. Kind of
Yeah.
later because I got into it 2006,
Yeah.
almost 8 years
Right.
before that, learning it.
And I
Then
wish I'd got it that early.
no, this is so exciting to hear. The key thing is that, we got to step into it. That's what my wife and I, we were buying single family homes. We thought that's our legacy building, wealth building. But you know what? Soon we realized, well, a lot longer. We started purchasing homes since we've been married 43 years this year. So we bought our first home 43 years back, and then
Wow.
rental home and others. But I think 16 years back, when the light bulb went on about syndication, like you
Right.
said,
Right.
and I hope everybody listening to us, right? Bo, you want to share something, brother? I mean, the thing is, scalability comes when you can have a lot of money. If you have, don't worry about syndication. But if you don't, this is the best avenue to scale up.
That's
Yeah,
right.
I would say that, from everything I've seen and all the people I finance, you know, um, the ones that grow the quickest are doing bigger deals, right? Like it just you're if you buy an asset that has 60 doors, your cash flow is going to most likely be better than buying a single family residence. And
Correct.
you might put the same down payment down. The difference is you might have two or three other teammates in the multifamily deal, but
Right.
you're leveraging more and you're going to get a better cash flow and equity multiplier most likely, right? So I think you can make a lot of money in single family. It's just going to take so much work versus if you own 2 or 3 nice sized multifamily properties, you would achieve it that much quicker, right? Like I could go out today and buy one building, which would replace the cash flow from all my houses that I've owned over years, right? Like, so you got to just think strategically. I mean, what is your goal? I mean, most people want to get cash flow and they want to build long-term wealth. And you're going to do that in some form of real estate, whether it's assisted living facilities, industrial properties. I've got investors that are buying industrial buildings and they're carving up the spaces and there was only 2 tenants. Now they have 8 tenants and the same amount of square footage and they're getting 4x in rent. So there's a lot of ways to make money in real estate, right? But it seems to be if you're going to make money in real estate, you got to jump over to the commercial side.
So true.
Multifamily,
brother.
industrial.
Yeah, no, I'm writing an ebook, by the way. The thing is, syndication is looked at it as like a bear, it's a gorilla and it's not good. So I think the biggest thing I've come to realize in the last few weeks is that I need to take a different approach as helping busy professionals, busy people, entrepreneurs, everything, who are our target markets actually to raise money. It's from their perspective, this is the best thing going for them, literally, because they will never be able to learn the tricks of the trade. They don't have time and energy and everything to find the deals, which we do, I can myself and others, right? It takes months and months to find a diamond, literally. The other part is that we are giving jobs to thousands of people. So it's giving back to society and also helping everybody we serve in this whole world of syndication. So syndication word, I'm going to make it so small, but all these bigger mind mapping, which I'm writing all the ebook on and possibly publish it also. Your perspective on it, brother.
Interesting thing about syndication, right? So I think you made a good point that people sometimes have this negative view of syndication.
Yeah.
And honestly, when I first heard that word, the first thing that popped into my head was syndicates. And syndicates was used in a negative connotation for the longest time. Probably still is in some ways, right? Because it implied people running some kind of a scam. But I think there's enough education now out there to have overcome that view on the word itself, which really is not. The word is just a word, but really what it really means is people coming together collectively, pooling their resources together, some in the form of money, some in the form of time, effort. It's no different than the startup world that I come from in the tech
Yes.
industry, where there is
Totally.
capital and there's sweat, right? There's
Yeah.
capital equity and sweat equity. That's exactly the same thing we're doing here.
Mhm.
And if I might, I'd like to add a little
Please.
similarity to. So I know Vinny, you do as well, and I am also. I'm an American, but I'm an immigrant American.
Yeah.
My origin is from India, and the one thing that I knew growing up in India, especially the low socioeconomic class that I grew up in, there was a very common concept that had been running for hundreds of years in India, which is a concept of what is called as a chit fund. And Vinny, you might remember
Chit
this.
fund. I remember
Chit
my
fund.
grandparents
Chit
telling about. Yeah.
Yeah, so Beau, so chit fund is a really interesting concept. It was usually run by women in India,
Yeah.
and women traditionally, not anymore, not in modern India, but in traditionally, women used to be homemakers, right? They didn't really
Yes.
venture out and get into business, but they did run a lot of home-based businesses
Yes. Yes.
unofficially in the unofficial economy. And what they would do is they would create this little thing called a chit fund. All it meant was everybody, a group of women would get together, a large group, put little
Yes.
money together, appoint
Yes.
one person as the treasurer. They would all get chits. A chit would basically be like an IOU, right? And what they would do then is when there's enough money collected, they would see who is looking to expand their business or who's looking to expand. If I'm stitching clothes at home and I'm doing it for like 5 people, can I now do it for 15 or 20 people? I
Yes.
would borrow some money from that chit fund and
Mm-hmm.
go do it. And then I would return that money with a little bit of interest, perhaps even with a profit share.
Yeah.
That was a very early
Look
form
at
of
that.
syndication almost.
Yes. Yes.
I think we're going to see more than ever right now. We're going to see more crowdfunding, more peer-to-peer lending. We're going to see more
Right.
syndication
Mhm.
because if you rely on the traditional ways, it's really, really hard to get ahead. I mean,
Right.
unless you're a six-figure corporate guy,
Mhm.
I look at all these hourly workers that are definitely needed, but they really need to take their money and start making their money. Where everybody needs this financial
Right.
education. I think that we got to start with like, this financial. There's no reason if you're making six figures, you should be struggling,
Yeah.
to live, and you don't have enough to save. I just doesn't make sense. So like, we're in a different market now.
Yeah.
What's your thought process going forward? Are you still aggressive multifamily? Are you diversifying into any other food groups? And what are your what's kind of
Yeah.
what's your path
So
to growth this year?
yeah, it's a good point about how we have to adapt to the market, right? So the way I'm looking at the market right now is in three different ways. One is that as far as my core focus is, it's going to remain multifamily for a variety of reasons, right? One is I really believe that when I want to invest in my time and effort and energy into any kind of asset class, it has got to be a core asset class that serves a purpose,
Yeah.
and multifamily falls into that core housing need.
Yeah.
So there's a phrase in Hindi called roti kapda or makan, which means your roof over your head, the
Yes.
clothes on your back, and the food you eat. Those are the three things that matter the most, right? People
Mhm.
survive on those three things.
Yeah.
And one of them is housing, right? Which
Yeah.
is a roof over your head. So while the other two are definitely areas to look into, for me, the chosen area that I really want to focus on, continue focusing on, is housing,
Mhm.
especially multifamily. Now, as far as diversification is concerned, I'm doing that more on a passive level at this point.
Mhm.
Depending on how the market evolves, depending on how my business grows, I might start adding on other types of assets. Um, but they will probably always remain secondary to multifamily, which is where I want to spend my energy. And with the market the way it is today, the fundamental shift I think that I see is um, figuring out a better balance of risk against where the market is headed in the long term. So what has happened in the last few years is that with the market the way it zoomed, everybody was taking a very short term view, right? Everybody was focusing on 5-year projections, and with the idea that, oh, within 2 to 3 years we're going to sell it, right? And in some cases maybe we'll do a quick refinance on a 2-year or 3-year bridge debt and then try to sell it off. um, it was all about making that fast cycle of cash, right?
Mhm.
To me, while we all did that to some extent, to me, what I feel like is that sort of negated the long term risk uh, adjustment and the inflation hedge that real estate truly provides, right? We weren't focusing on that. We're
Yeah.
focusing on just everybody's focusing on fast cash flow, fast multiples. I think that period is behind us for a while now.
Mhm.
Um, so what I think we need to go back is fundamentals. That real estate really is a long game.
Yeah.
Yeah. Yeah.
So as I focus for the future now, it's going to be long game focus, and I'm
Yes.
I'm trying to educate my investors as well on that. Is that rather than thinking only about the 3 to 5 year terms, let's think about 7 year or even 10 year terms or even longer, right? Let's think of how this becomes a valuable asset within your portfolio that really keeps you in good shape for a much longer term and builds that kind of wealth that you can really depend on
Mhm.
versus just the cash that comes in to the
So
process.
true. What you're saying, Ike, is so true, bro. Because I think the properties, we have seen it in the last 3 years, the cash flow is getting
Shrinking,
decreased and decreased,
shrinking.
squeezed down with insurance hikes, cost, insurance expenses, of course. Not only that, the variable rates, a lot of people got into it. In my Tennessee property, I got sucked into it too. But the property produced, I was sharing with Beau, 35,000 per month more in 1 year. So now I'm still able to, but I locked in. Thank goodness, Freddie gave me 5.6 or something. I just locked in the rate this week for 10 years, and which is amazing. It's going to go down from almost 7.96% to 5 point something. But no, you're so right about it. We cannot really give high cash flow, and also the rents won't be increasing that much. Are you? Is your thinking in that regard too?
Honestly, I don't know, right? I think the rents for sure for the this year, next year, probably at least for the next 2 or 3 years, we're going to see some kind of stagnation and growth.
Mhm.
There might be areas of the country where it might fall,
Yeah.
um, but long term, I think we're still seeing a very positive story on rent growth. And it may never become the 30% rent growth we saw in
Yeah.
the last 2 years,
Yeah.
but it'll probably exceed inflation
Yes.
because at the end of the day, the housing shortage that we have in this country is just incredible.
Yeah.
It's incredible in a negative fashion, unfortunately. There's a lot of people who need access to housing that is just not getting built sufficiently fast enough. And during the pandemic, that shortage became even worse. So I know, Bo, you've probably wanted to be
Mhm.
add something to what I was saying. I'd love to hear that.
Yeah.
No, no, I was just listening. What you're saying is I totally agree. I mean, like, there's certain markets that will still probably have rent growth. There'll be the majority of the markets will have rent stagnation and some rent decreases. And yeah, I mean, I think looking back and just seeing a lot of the syndicators that I know, just it was really an amazing 6, 7 year run, really like unbelievable,
Right.
where I was watching guys like Vinney, flip apartment buildings in 2 years' time, which was like he was smart for selling a lot of his assets, right? Like where are you going to get equity multipliers like that? I think now
27th old brother, 27th.
I think now you're right. It's a long term game. You don't think it's a market where there's a lot of unknowns. So you got to think, does this deal make sense for 7 or 10 years, not
Correct.
3 or 4? Because we're probably not going to get out in 3 or 4.
Mhm.
Yeah.
And then I've gotten some horror stories about insurance in certain parts of
Yeah.
Texas, right? They've where they've like doubled and tripled because of the storms, and it like,
Right.
man, that stuff scares me. Another story was somebody building burnt down. Like, you just there's also all these unexpected variables. COVID actually kind of helped the
Yeah.
market after the first few months. It was like a
Mhm.
crazy boom.
Yeah.
But I look at it like a total. I think the world's really changing. Like today, for some reason, and I want to get your perspective, Ike, because you have a tech background. Is I'm really intrigued with companies that are heavily invested into AI, because I think there's no question in my mind since the launch of ChatGPT
Yeah.
that AI is going to be the biggest game changer since electricity for our new era. And
Sure.
so, from a tech background, where do I research it? So I was kind of like interested,
Mhm.
just from a self perspective, is like, where can I research these emerging companies that are publicly traded? Because I'd like to buy some stock. I'm not a stock guy, but I will buy AI stocks. What are your thoughts on AI, Ike?
It is absolutely an fascinating frontier right at the moment. It's finally hitting on. It's an interesting thing. When we used to, I don't know if you guys used to watch Star Trek, right? The
Oh
series
yeah,
when
yeah,
it
yeah,
ran in
yeah.
the early
Hmm.
phases. I think now it's a little different in the whole focus, but the early phases, it was game changing in the kind of concepts it was providing. Right in the very first Star Trek series itself, it talked about things like video calls when at the time when the internet did not exist, and now we have video calls, video
Hmm.
conferencing all over. It talked about being able to literally build things out of thin air, and now we have 3D printers that can do really a lot of that.
Yes.
So the AI is another one of those things that was there in, I think the second series of Star Trek with Captain Picard. And sorry, a little bit of
No, no,
geekdom
that's
going on
good
here.
though. Yeah, we can
but
relate to that.
but I think we're just at the cusp of it. What probably is going to happen is right now is it's going to end up um, scaling up automation in a much bigger way than we've been able to accomplish so far. And a lot of automation today is still being done with humans trying to figure out how to automate and what to automate. And I think that is my feeling is that is probably going to be the first frontier that might get conquered with AI, where if AI gets embedded into the tech tools we use from an operational perspective, then AI can at that point start figuring out self-learning and figuring out what to automate and make better. A simple example would be let's say yield optimization, right, for rents. So you
Mhm.
have the LRO products or
Yep.
AI. Like there's a bunch of different products that
Mhm.
take data in a market and try to figure out the best possible rental values for each apartment property. But to a large extent, it is very human driven, right?
Yeah.
It's not completely automated. There are
Yeah.
humans feeding in data on a weekly basis, daily basis, whatever that frequency is, and then making judgment calls on whether that the yields coming out of it make sense or not, and then overrides on that. So that judgment call that humans are having to make still to ensure that stay in a good state with the way the yield optimization is happening, I can fully imagine AI taking over that function, right? If there's now an AI system that has access to all of this data in the market and is able to self-learn and see how trends are moving and automatically move things accordingly, within certain basic parameters.
Well, so like let's talk about this. I was at an event and I was in the hot tub with a bunch of multifamily syndicators and we were
Yes.
talking and somebody's interested in renting a unit, right? They go online, they're on a chat. It's an
Right.
AI bot. The
Mhm.
AI bot's able to see like, do you have any two-bedroom units? It's going in and it's pulling the data. Like this is all automated, right?
Yeah.
It's going to replace a lot of people,
Right.
but there's going to be a whole emergence of these what I'll call AI facilitators, the people that are giving the prompts and doing like what I've noticed using AI now.
Mhm.
It's the information that you get back is only as good as you put in from the prompt,
Yes.
right? So you
Right.
have
Yes.
to learn how to interact. So there's a whole world of people that, and I think India is going to probably be a big push. I think there's going to be a big push in India because let's face it, there's a lot of software engineers that come from India. I think there's going to be a big push where they're going to be the pioneers in the AI space as far as like these prompt things. I can kind of see the vision because if you look at like Silicon Valley, right, there's a huge Indian like you know population and the training. I don't know why in India, particular, you guys have a better insight why there's so many software developers and engineers there, but it's amazing. So I see this as a whole interesting revolution that is unfolding for us right now. So we don't realize, I don't think we can even fathom the impacts of what's going to happen eventually because
Right.
we just can't fathom this. But before you know it, cars already can drive by themselves. It's
Right.
going to be there. I mean, life is going to change, and I don't want to get left behind.
Yeah.
I've been left behind before on some things, and I think that's the worst. Like, for example, like syndication, right? I was left behind. I didn't understand, right? I was scared. If I was the one syndicating the deals, I would have been the one making the millions of dollars, right? So I think you have to adapt to these technologies, and I think that's the thing. And you have to be open minded. Like when you were in the car, Ike, with your colleague, if you didn't get in that car,
Right.
Mhm.
it was kind of fate, right? Like it's destiny. Like if you didn't get in that car today, you might be sitting at a cubicle right now.
I'm
Probably. Yeah.
so glad you're saying that. I'm so glad. I hope everybody watching us, guys. This is Vinny and Beau show. We do that live every Friday, 9 a.m. Sorry, that introduction. We got to change that. The key thing is you got to take that step, jump into real estate,
Right.
jump into a side hustle, jump into an entrepreneurship rather than W2 job, getting shackled and encaged. That's what I find. A lot of time we limit our belief system, and that's what we talk about in our show. So please join us, give us 5-star reviews and all that. And so glad to have Ike also. The big thing is with this AI, I just want to put a plug. I got this AI. It's like QuickBooks, but I'm I want to disclaim that I put a disclosure. I'm angel investor in it. Now we have whole QuickBooks on learning. It learns your debits and credits. It shows you all these different billing because they know you paid them last a month, and it does reporting all these meeting minutes because so many things you're buying and selling. It's just mind boggling to me what AI is doing. So check it out, scarletbooks.com. Just want to put a little plug on that one. Charlottebrooks.com. The key thing is also the other one is AI with cloud defense, right? That's again, I'm angel investor in that. It's becoming a very big company. I want to put a disclosure, but look into that cybersecurity cloud defense AI. So no, I go ahead. I'm sorry to interrupt that
No,
for
no, please. Yeah, this is it's
yeah.
fast.
No,
I
I
love
did.
how Winnie is able to always, always have something he's doing already about anything we're talking about.
And oh, by the way, here's my book. Here's my new book. But that's part of it though, right, Ike? So like, I think um I think what's interesting about Vinny is he has an engineering background, but he doesn't have the same usually like uh he, he's not engineers are they're introverted, right? And he's not, which
Right.
talk to us about this as we're going through like how has raising money been for you? Was that natural for you in the beginning, or how did you learn to become a good
Yeah.
money raiser?
No, no. So that I think is a great, great point. In fact, let me add a little to the color to the story of how I got into this business, right? So that car ride happened. I learned about what my colleague was doing. I went back and said, I'm going to learn more about this. I talked to both her. Her name is Holly Williams, and I'd love to give her credit,
Mhm,
and her
mhm,
friend Joe Fairless, right? So I
mhm,
called both of them, talked to them. I placed some money with one of their projects, and then I said, I'm going to go find books to learn about this. I'm
mhm.
going to first learn as much as I can, because that's just the engineering mindset. You tend to want to learn. You don't
Mhm.
want to create a structure. You want to try and figure out how you're going to build something.
Yeah.
That's how it goes. And the first book I came across was, I think it was called Commercial Real Estate for Dummies, or
Ah,
something along that line, by Peter Harris, right?
yes, yes,
And the
yes.
entire book, he talks about how he was an introverted engineer,
Oh,
and his struggle in overcoming his introversion in being able to build that business. He never reveals how he did it though. Okay, he just keeps talking about what he did, and he talks about his coaching program in the process, which is perfectly fine. But it got me thinking. I realized that I this is something I'm gonna have to really figure out, right? So my first instinct was, I'm going to go do something really small just to test the waters and see if I can raise the money for that.
mhm.
And I picked the smallest possible market. I picked a market in Ohio, um, primarily because when I first moved to the U.S., I was a graduate student in Cincinnati, Ohio.
Ah,
So I
okay.
knew that market well because I'd lived there, and
Mhm.
I knew that it was going through a little bit of changes. There was some amount of economic change happening there. Spent some time there, and here's what I found. Right, I kept looking for small stuff, and I kept getting beat by people, single people with large checks. I
Mhm.
would put in offers, I would try to get stuff, and I would get beaten by people just writing a check for the entire amount. And I realized I'm never going to be able to make it work if I keep saying super small. Because,
Mhm.
yeah, that super small is what I'm trying to do in terms of, because I'm not confident about raising money.
Yeah.
So I'm like, if I talk to maybe five friends, that's enough to raise this much little money.
Mhm.
But if I'm going to really stretch myself, if I'm going to put myself in a super uncomfortable spot, that's when breakthroughs happen. That's when I've seen breakthroughs happen in my tech startup world. And
Yeah.
that's what I realized the only way I'm going to make it work. So at that point, I had left my job. I was doing this full time, massive risk on my head. But I
Mhm.
said, this is where I'm going to actually make the breakthrough happen. The first deal I did was actually in partnership. I was a co-sponsor with another person who had experience, so I was able to lean on his experience a little bit
Mhm.
and go approach, just my friends. I just talked to my friends. I talked to people who are my past colleagues from tech days, and I just explained to them what I'm doing. I told them, look, I've taken a huge risk
Mhm.
because I'm going to do everything I can to succeed here, and I don't have a full time job, so I have fire in my belly.
Mhm.
I may not know everything right now, but I'm going to make it work. I'm going to learn. I'm going to make it happen. And you guys know me. I'm going to put everything I have into this. And I think that was enough. That was
Yeah.
enough for a good bunch of them to say, yeah, we're going to bet on you. Right? If
Mhm.
they're going to go bet on the stock market, they'd rather bet on somebody they know and trust for many years to make
Yeah.
it happen, especially when they know that I had no fallback. Right? I
Yeah.
had no job to go back to and say,
Mhm.
yeah, okay, I've got a safe job W 2, so I don't need to worry about this if it
Mhm.
doesn't work.
I
right?
love that because
So true.
like culturally,
Yeah.
that's it seems, and I'm not Indian, but that's a big, the you got the gig, you got the job, you're making the six figures, and for you to transition and being an engineer too, right? And for you to transition into this entrepreneur,
Mhm.
right? Like that is some serious, like that's a hard shift to do for a lot of people. And
Mhm.
I could see that challenge, and you were probably sweating bullets in the beginning. I
Yeah.
could just see you sweating bullets, right? Like, oh God. I mean, you probably had some reserves, and you always were good with your money, and it wasn't like you're living paycheck to paycheck.
Yeah.
So, but yeah, that's I think that speaks strength, right? Like we all have to have that internal strength to just say, hey, listen, what's the worst that's going to happen? I fail at this. I burn through some reserves, and I have to go
Right.
get another W-2 job.
Yeah.
What's the best thing that happened? You become successful. You own a couple thousand doors. You got great cash flow. You got great tax write-offs, and you're living the flip-flop lifestyle, right? You can work
Right.
in your flip-flops, and
That's
so
right.
that's the
On the
beauty
beach,
of it.
anywhere, laptop and cell phone, bro. That's it.
No, I think, and the other thing I think we're not giving enough credit to is the time that you get back in your life, right?
Yes.
Time. So
Yes.
one other thing I'll share from a personal perspective is that
Mhm.
the last year that I was in the tech world before I made the shift into real estate, right? That entire year, my younger child, she'd entered kindergarten.
I see.
That entire kindergarten year, I didn't really get to participate in any of her school activities at all. My
Mhm.
child went from kindergarten start till the end, about to enter first grade, and I had not got a chance to do anything with her, be a volunteer in her school,
Mhm.
see her just go through that crucial first year.
Yeah.
And I think that was a big light bulb moment to me as well, right? I was trading my time for money. I
Yeah.
was trading my precious time for money, which I was never going to get back.
Yeah.
That year, I'm never going to get back.
No.
And I think that is the huge change that I think was really a big motivating factor. Apart from the fact that you got to have the fire in the belly, it was a big motivating factor that I needed to be there for my children. And that's the biggest thing now. Vinny sometimes calls me and say, "Hey, want to talk?" I'm like, taking up my children from school, taking
Yes.
them for errands. Not
Yes.
right now, right? I can control my time, make sure my time is spent in the things I value in my life,
I love it.
um, and
Love
That's
and
it.
just
great.
So,
Yeah.
get that
so
bigger.
wonderful. So wonderful. It's been so much fun to have you, Ike, on our show. How can people reach you? I mean, we would love.
Yeah,
Uh-huh.
yeah, absolutely. So I mean, I'm available on if they go on my website 110equity.com. There's a contact form. They can just
Mhm.
fill that in, contact me. I'll get the email directly, and we'll be happy to set up time to talk with anybody.
Awesome. Awesome. Any last comments, Bo?
No,
Brother?
great episode. I love this. I love listening to the stories of success and
Yes.
everybody's journey. Everybody has a little bit different journey, and everybody provides, the reason I like to do podcasts is because you meet people you're not normally going to meet. Like I didn't know Ike. Right now, I hear
Mhm.
Ike's story, and it's like, yeah, like he got back time. He spends with his family. He ends up making more, creating a
Yes.
lot more wealth.
That's
This is why we
huge.
do the show, is because we want to inspire and give people tips and tricks. Like, hey, it's okay. Like, go for it. Like the guy I interviewed today, the 30-year-old.
Yeah.
He said, I don't need to know everything. I'm just doing it, and he just
That's
does it. Right.
incredible.
Like, and we gotta all have that. You got to just jump off the cliff and go for it.
I love that. What you just said. We should wrap it up with that one. Jump off the cliff and
Yep.
don't worry about it. Live the life of fearless. Live a life and take that step, because if you take that step, you're going to figure out a way. I tell that to everybody. Let's have a great show next week, Friday, 9 a.m. See you next week. Thank you so much.
Thanks for inviting.
Oh, what happened?
So happy to be on your show finally.
I'm a long time fan and I watch all your guys' content.
Awesome. We're very, very, very invested in our community.
It's wonderful to be here.
This is Vinney Chopra and also my good buddy, Beau. so happy.
It's amazing what's going to happen. So, we ramped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
Oh, I know. So excited to come live to you all. You live 9:30 every Friday. How to take your business to the next level.